everyone. My name is Phil Blancato, and I'm CEO and President of Vladimir Thalman Asset Management, Chief Market Strategist for Rosaic. Welcome to another weekly Market Impact, November the 3rd. Hope you had a great Halloween. It was very cool. I saw a lot of cool costumes. I had all these kids come out. It was cold here in Jersey on Friday night. We had a strong wind, and all these kids came by, and we gave out lots of candy. I was having a blast. Our little dog Stella was going crazy. A lot of fun. Great holiday. And then we turn to All Souls and All Saints Day. For those you may not celebrate that. Giorno de las Mortes, right? For the folks who celebrate that. Day of the Dead. A chance to go think about loved ones who are no longer here. Kind of cool time of the year. And then the big one, we set the clocks back. How many of you enjoyed that extra hour of sleep? I was with some friends watching the World Series. Wow, I'm a big baseball fan. For those who don't know this, I played some baseball in high school and in college. Really enjoyed doing it. Great sport. Played a lot of soccer, played football. I was a swimmer, all kinds of stuff. I love sports. But the watching the way that series unfolded was incredible. Two great teams, in fairness, two really great teams. Really thought Toronto was going to pull it out. I was kind of hoping they would lose. I didn't like the way they kind of made fun of the Yankees after that series. I'm a big Yankee fan. I thought they were a little unfair to the Yankees, and we're asking them why didn't they play New York when you won the game in Yankee Stadium? Not cool with me. Sorry, not cool with me. But having said that, I get it. They're a great baseball team, great hitters. Vlad Guerrero Jr. Wow, that guy can just flat out hit. But the Dodgers, to their credit, it wasn't because of their superstar Otani. I mean, it was really the rest of the team that showed up, guys you don't normally hear of, and really impressive. And Yamamoto, I'll talk about him later too, but really cool. How about those Georgia Bulldogs pulling it out? I mean, the Florida Georgia big game. The girls were down in what's called Frat Beach. It sounds crazy, but it's this place, St. Simon's Island, which is in Georgia, just on the coast there. All the kids can go down there, and I think they have 4,000 or 5,000 kids that show up, and they go wear their Halloween costumes and celebrate on the beach and have a lot of fun. Then some of them go down to the game. The girls both went to the game. What turned out to be a wild game. Florida, they just kind of ran out of steam, and Georgia just kept coming back and coming back. I wish they weren't a second half team in every game, but it was a really good game. Hopefully enjoyed college sports this weekend. It was wonderful. We're getting into SEC Girls Soccer Championship and then National Championship for Girls Soccer. Why I care about that is my niece, Luciana Latino, plays center mid and center back for University of Tennessee. So we're rooting them on as well. Lots of fun sports stuff going on. But my hat's off to the Dodgers and all those Dodgers fans who won it. And then finally, for you marathoners out there, way to crush it. I'll talk about that a little bit later too. Well, plenty to discuss this week. It's just me, no guests this week. So I'll keep a quick update. You guys get long. We've had a few longer updates. So try not to bore you to tears. First off, it's election day tomorrow, and one of my dear friends is running for sheriff in Somerset County, New Jersey. If you happen to live in Somerset County, vote for Mike Minacchio, one of my buddies who's a retired cop, running for sheriff. But more importantly, big kind of election moment. These does this set us up for what the midterms might be like and what happens in the midterms? I know in New Jersey, Chitterelli and the lead, and then Mikey Sherrill, two interesting candidates. See who wins this one. We're a broken state. Our taxes are insane. We have too many little towns. It's just goofy the way that the state goes. I don't think anybody could fix it unless you come in with a hot knife through butter and change the entire way the state's constructed today. But it'll be fun to see how it all works out. Our taxes in New Jersey are the second highest in the country. So I don't think anybody can fix it. I don't care about politics. But my buddy Mike, go get it, buddy. I hope you win. That's kind of fun. I start off with a little bit on tariffs. It was interesting that the Canadian Premier had to come out and Mark Carney and apologize for the comments made from the head of the Toronto, Quebec region, simply because Canada's frustrated with the United States, and the United States is frustrated with Canada. There was some goofy video put out about Ronald Reagan that was doctored, that was gonna upset President Trump. But I thought I'd give to start today a tariff update, and just real quick, what we're seeing from tariffs, and I'll have Ben Dennis join me because he's one of the ones doing some extra work on this for me. Maybe have him join next week. But we're still in an interesting tariff place. I still think we settle in at about 10 to 15% tariffs based on country. But as of now, Brazil's the worst, up there at 50%, but that's got some politics in it. And it looks like the Senate's going to shoot that one down. India right behind them at 50%. That's politics, also trying to get them to stop buying so much Russian oil to end the war between Russia and Ukraine. And then places like Myanmar at 40, Canada still at 35, Iraq at 35, Mexico down at 25. That's a big one. That's one that could affect our pocketbooks because of what's happening with how much stuff we buy from them. Vietnam, Cambodia, places like that up there at 20. The cheapest of all them all, Venezuela, which surprised me, still down at 15. But we don't buy a lot from Venezuela. Maybe that's why. Uh, when you look at it, the most of the world is between 10 and 16% tariffs, with the highest being 50. What does it mean for all of us? This ongoing negotiation means that we're probably still going to pay around $600 a year per person. Maybe a bit more to see how things settle out, but it's being used in a way that's kind of unique, in that it's being used as a way to maybe stop wars in some cases, or more importantly, realign some of the things that's happened to the United States over the last 30 years. We've talked about some of the tariffs on, bourbon whiskey in France at 40%, or iPhones in Europe at 25, cars at 25. Can some of this be a realignment? Well, last week's meeting between the president of the United States, President Trump, and President Xi of Canada, it bore some fruit, with Canada, with China being back in there at somewhere between 35 and 45. The debate over rare earth minerals is important. And why that's important is because you have a scenario where, in fact, we really have to be careful about what we do with our defense scenario. We know we use rare earth minerals in electric cars and defense equipment and aircrafts. It's one of these things that's really terribly important. So I think, can the United States develop its own rare earth materials? Can we get to a place where suddenly we have the ability to defend ourselves if we need it? At its core, there is some of that. There is some of that, I think, that is very important to understanding what happens long term. In the short term, because we don't want to see, a lot of folks being punished with this idea of, imports and tariffs being so terrible that it really raises prices. That's a problem. And we do know that there's lower gasoline. I'm sure you all felt it, lower gasoline prices out there, but it doesn't mean we're out of the woods yet from this tariff stuff. So it's still out there. At a time when the stock market's not inexpensive, when you look at valuations on the S&P 500, they're still quite stretched. When you look at the last week, the market in and of itself is still trading at a forward earnings basis of 23 times earnings, which basically means for the price of stocks divided by how much they earn, they're expensive, with the average historically being 18. The bond market, which I really like, the bond market, as you remember from my guest last week, really real signs of life there. You're looking at yields of 4.5% on bonds. The return year to date on the bond markets is really quite good, up over 6.8% on the year, giving a little bit back last week, but not a lot. For the week, the S&P was up again at an all-time high. Now it's 68.40. There's a chance we'll see 7,000 by the end of the year. There is that chance. And the reason why, even though stocks are expensive, earnings season has been good. The one thing we have seen is that, there is this thing called seasonality. And I actually think seasonality is an important thing. There are times of the year when the market just grinds higher. Now we're clearly in Santa Claus rally season. I think we've already had it in September and, to a degree, October, much better than we expected. But just to give you some idea, when you look at the S&P 500 median rate of return, over the next week, it's 1.72%. Over the next month, it's on average 3.71%. Over the next 3 months, up 7.51%. And it is the best period of the year right now, when we're in this scenario where, the months of November and December are usually very good for stocks. In the 98 years since the inception of the S&P 500, the index has been up over 10%, more than 40 times. With November being one of the best months of the year, followed by December. So seasonality is clearly on our side, except going into when the stock market's not cheap worries me a bit. So my advice to you today is take some profits. It's okay. I know you've made some money this year, probably more than you expected. Heck, the S&P's having a wonderful year. When I look at where the S&P's at on the year, it's really a great number. There's no doubt about it. Better than I expected, being up 17.5% on the year. The Dow up 13.5% on the year. Small cap stocks were really raging hard. They failed last week, down 1.3, but still up 12.39 on the year. Growth stocks crushing it again, up 21.50. It's been about Magnificent Seven again. But the bond market's doing great. So no reason why you can't buy some bonds. The stock market, when small caps had a great rally here, when you look at the last 3 months, small caps have crushed it. Now, the small cap market needs more Fed cuts, and the reality is why I'm telling you to take some profits. I don't think we're going to get any more Fed cuts this year. Maybe in December, it's a long shot though. And why? Because we still got some mixed data on inflation. We're still in the middle of a government shutdown. This week, you're going to hear a lot of noise about how the shutdown is actually becoming problematic. We're closing in on being the longest ever. And on top of that, there seems to be no negotiation. The problem is soon the military guys don't get paid. We're already looking at the folks in all branches of the government not being paid. But most importantly, it's the folks that work at the airports, the guys in the tower, guys and gals in the tower that can't land the planes. In New York, we're already down to 25 planes an hour. That's half where we normally are. So you have this scenario where, in fact, it really is becoming very difficult for us to kind of maintain some of the basic stuff in the economy. It's one thing to say shutdowns don't affect economies. That's true. It's a whole other thing if they start to get into 6 weeks and 8 weeks. Could you imagine if we have 50 to 75% less flights happening in the month of November around Thanksgiving, the biggest travel season of the year, because the shutdown's continuing? I don't see it prolonging. I think it ends this week. I would have thought it ended on Friday with paychecks being skipped again. I'm surprised at this. Shame on the folks in Congress and in the Senate and to the degree of the president. This is wrong. There's too many people missing SNAP benefits. These people are not getting paid. And for you, who am I to say this? I'm being a little bit political here. I shouldn't be. But now you're affecting regular people. Just cut a deal. Cut a deal by 6 months. And over the 6 months, negotiate the tax credits around the National Health Care Plan. Today, it's too expensive. We probably have to come up with some reduction in tax credits and increase in prices because that's the way healthcare works for everybody. But where we are today, it's just silly. It doesn't make any sense. And you're hurting people now. And you could end up hurting the whole country, which means that could have an economic impact. Another reason to take profit. So my profit mindset today is pivot to bonds, pivot to maybe small caps for international. One, valuations are stretched on the S&P 500. Two, the bond market's paying a wonderful dividend. Three, the Fed's probably not going to cut interest rates anytime soon, if at all, for the rest of this year. And four, while earnings season has been good, we've already had one heck of a rally. There was an interesting report I read over the weekend about how companies are now starting to think more and more about layoffs. And the one thing about this market is the labor market is hung in there. But if layoffs start to happen, and we're seeing a little bit of that, Amazon announcing a bunch of layoffs, seeing it's harder and harder to find a job. Now, don't get me wrong, the unemployment rate at 4.3% is some of the lowest of our lifetime. But if we start to see that tick up, that's another big problem. And we don't have data on what the labor market's doing. So I just think you want to be cautious here. I do. I think you want to be careful about where we're at. And if you haven't taken profits going into this, I think you should. Couple of fun topics I want to bring up, which I don't normally talk about. I thought I'd pivot with different things to talk about this week. So I'll call 3 or 4 different things. One, there is the big beautiful bill did one thing by handing people bigger tax breaks, and the tax breaks are going to be reflective of, to some degree, 2025 when it started mid-year. So one thing to think about in 2026, which we haven't talked a lot about, the average person is probably going to get an extra, $600 to $1,000 more in tax credits, depending on how much you make, especially if you make less than 100 grand a year. So security breaks, overtime breaks, tip breaks, that's a boost to spending. And that could happen easily in that second quarter of next year at a time we're a little bit worried about what might happen if tariffs come to pass. Remember, there was this thing about front loading of goods so you avoid tariffs. And then the second 6 months of tariffs, called the first 6 months of next year, would end up being an area where we see higher prices because of tariffs, assuming they stick around. By the way, don't forget, the Supreme Court's going to rule this week if tariffs are even an eligible thing for the president to do without the House and the Senate. If the Supreme Court rules against the president, then this is all for naught. Then we go back to where we were. We have made 200 billion, almost 300 billion dollars, 200 billion plus in tariff revenue. It's helping bring down the deficit a little, not a lot. The deficit's much bigger than that, but it has helped the revenue to a degree. Imagine if this all goes away based on the Supreme Court's ruling this week. We'll see. It's a possibility, everybody. It's a possibility. Assuming that doesn't happen, the big, beautiful bill is already passed. And it means that one of the topics I want you to put in the back of your mind, one of the things that makes me a bit optimistic about next year is, in fact, that we may see the consumer stay strong. If we don't get an increase in unemployment, we don't see layoffs tick up, and because of the bill, we could see a scenario where, sure enough, taxes actually are beneficial by giving people more money. That's one thing to think about. Second one, I do think you want to realize that I get a lot of asked questions about, is this a tech bubble like 2000 all over again? And I struggle with that concept. For example, when you look at companies like Alphabet, who have almost no debt, Meta, almost no debt, Microsoft, no debt, Nvidia, no debt. The only one, Amazon's got some debt, but they put out some really interesting information recently. The net income that they're making is some of the greatest income numbers ever. Nvidia a year ago was worth 2.6 trillion. Now it's worth 5 trillion. Apple 3.3 trillion, now 4 trillion. Microsoft 2.7 trillion, now 3.85 trillion. And on and on. Why I mention this is these companies are gigantic and they have real revenue. So if you've made money in them, good for you. They're trading at valuations that are very high. I would sell a portion and go buy some bonds and small caps. But they are great bellwether companies. So I just don't think we're in an AI bubble. And I think there's some sanity to the AI boom, and that you're seeing companies spending on it, being smart about spending on it, but not overspending on it like we did in 2000 in the tech bubble. So other companies spending money on AI so far is fairly reasonable. And even dividend companies that are using AI are using it. So far, their spending of it is quite okay. So my second point is, first one is the reality of the market being a bit expensive. But I think you could look at this scenario and ask yourself, is it a time for me to take some profits and pivot? And I think you want to do that. I think you want to be smart about where you're going with some of this stuff. And I think you want to be careful that you're not overthinking it. So that's a topic I want to throw at you. I want you to think about that these companies are magnificent. They are gigantic. They are bellwether companies, but I don't think it's an AI bubble. Putting tariffs aside for a minute, it seems like tariffs because of lower gasoline and maybe a resolution there. That's not a big issue, but I want you to think about being diversified in your portfolio. I want you to think about taking profits. Even though seasonality is on our side for the market, I'm not telling you to leave the equity market. Just be smart about rebalancing. The second one I get a lot of questions on is the US, the United States, and more importantly, is the dollar losing its attractiveness? The reality is no. I mean, they just don't. I mean, sure, there's been some selling of bonds, of US bonds. The reality is 70% of American bonds are owned by all of us. I go one further. I don't think there's a scenario where you have real danger in the United States losing default currency. That's just not real. We do have too much debt, and the rest of concerns about it. But if there was a real problem in the United States, you would see yields on a 10-year Treasury not be 4%, be 5 or 5.5. The 30-year Treasury bond would be 6.5, because people would be selling our bonds and would require higher yields for people to buy them. Now, I'm not saying you don't go buy gold. I know there's been rush to gold, and gold has been about really used to be an inflation hedge. You bought gold because of inflation going higher. Well, inflation's under control. It's about 3%, which is better than the 4% we grew up with, by the way. But 3% is a solid number. There's hopes that it goes lower to 2. Europe is down at 2, so they're no longer cutting interest rates. Europe got what it wants, but Europe hasn't grown. Europe doesn't have $1 trillion company, and I just listed 5 of them for you. It's not even close to us, the growth of their economy versus ours. We have real strength in our economy, and they don't. So I don't think you need to be worried about the de-dollarization of the world. And if you did, it would show up. It would show up in the bond market. You see countries actively selling our bonds to try and buy something else like gold. And there's been a little bit of that. The tariff stuff has caused some of that. But the dollar, this idea of debasing the U.S. currency, and the reality is there's too many dollars in the world. There's some truth to that. But you're still the biggest currency in the world. You're still the biggest economy in the world. You're the only real growth engine in the world, and to a lesser degree, China. So I just think that topic of the United States being, too much debt and a broken old economy is wrong. We do have too much debt, but we grow enough to warrant the size of our debt. And that's the critical difference. So on that topic, I want to just give you something to think about provocatively. I want you to think about, when being diversified matter at a time when stocks are really expensive and there's still this tariff goofiness out there in spite of what time of the year we're in. The second one, this idea of the dollar falling apart, it's just crazy to me. I don't buy it. I think it's just one of the things that we talk far too much about. Now, I don't think the Fed cuts, and that could mean probably it could mean a bit of a weaker U.S. dollar. There is a possibility of that, but nothing that's so systemic is going to create, a major issue for us. I think that's crazy. Another one that I think sometimes we forget about is being diversified does matter. So as yes, we've had these gigantic companies, we've had this incredible moment in time when the United States exceptional has been great. Stock market has been rewarded for it. The dollar isn't going away, and I do think seasons of the year matter. But when I talk about diversification, there is this idea of other areas of the marketplace that I think look really good. And if you break it down, I think things like consumer staples, buying things we need is still a good idea. Energy at a time when we need much more energy. This idea of the United States kind of returning back to its roots to some degree. And if saying that correctly, there's an acronym I really like. It's called ROAR. Listen to this for a second. It goes for basically, you're looking at automation, robotics, supply chain rebuilding, and optimization, reshoring of the U.S. economy. Or put this way, reshoring for R, optimization for O, automation for A, and robotics for the other R, otherwise known as ROAR. I think it's pretty cool. Reshoring, optimization, automation, and robotics. Everybody, you're going to have a robot in your house at some point. You probably already do. You may have one that's vacuuming up your stuff. And why I mention that, I think sometimes we think about just AI. Well, if you're in consumer staples, you're part of ROAR. You're in energy, you're part of ROAR. You're in industrials, you're part of ROAR. You're in utilities, you're a part of ROAR. The rebuilding, going back to our roots of the American economy. Not completely. We're always going to be a service-based economy. There's no doubt about that. But I think there's something pretty cool about ROAR, that it makes the United States a better, more diversified economy. That's pretty cool. So I want to leave you with a couple of concepts today I normally don't hit on. As far as markets goes, I hit on them. Things are good. I think ROAR is pretty cool. I think being diversified is pretty cool. I think the dollar is safe. It means the U.S. economy is still crushing it, in spite of all the headlines and goofiness you hear out there. Do we have things we need to fix? Yes, your debt. Get your debt right, which is why we're in the middle of a shutdown. The shutdown could become problematic long term. Just not yet. Let's see if they can't get this right this week. All right, I've been yammering around, talking a whole lot this week. My shout out of the week. First off, the easy one's Yamamoto. That guy pitched on 0 days rest. At a time when we all think about life and people being don't not I just feel like people don't step it up like we want to. Let me shut my little. I don't think people step it up like we used to. I mean, how many times I hear about quality of life and doing the right thing and work-life balance? I get it. Those are all real things. I'm not saying they're not. But when you see a person step it up and go, give me the ball. I don't need rest today. I'm willing to do whatever it takes to crush it. That's pretty cool. I read a piece about dementia over the weekend and what the leading cause of dementia. And dementia in and of itself is caused by people that lose the value, losing the desire to do things, to be active in their mind. So the journey of work and the effort of work creates incredible mental stimulus. And when we stop doing that, it does create impact. And I think a guy like Yamamoto stepped it up and just said, give me the ball. Great example of grit. I love grit. I love when you have grit and you're willing to do whatever it takes to win. So good for him, World Series MVP. The second one, another gritty person, my nephew Mark Kostiak. My nephew Mark Kostiak ran the New York City Marathon yesterday. Came in 4:08. Worked hard at it, got it done. I ran the New York City Marathon once. I didn't train. I just showed up and ran it. Don't recommend it. I got it done in 4:26, I think. Very proud of myself for finishing without training it. But my nephew showed up yesterday, got it done. My brother Michael Blancato, he also got it done in 4:38. And my little nephew, I call my other nephew, he's really my little cousin, Matt Russo, running a 3:08 while he was sick. He normally runs a 2:30, 2:35 marathon. He's very fast. But to those New York marathoners yesterday, my hat's off to you. When I went to that race and I watch people on crutches, in wheelchairs, missing limbs, fighting through pain and exhaustion. So my hat's off to the people with grit in the New York City Marathon, to Yamamoto who's got grit. Because grit to me is the 4-letter word for success. If you've got grit, you win. Whether it's studying markets, working at your job, or pitching a ball, or running down the street. Grit to me is how you win in life. At least one of them. Too much yammering and too much philosophy for me. I'm being a fool philosophical today. Anyway, have a wonderful week, everybody. Just think, we're getting closer to the darkest days of the year. But right after that comes the brightest days of the year. I'm going to be counting down to that. Thanks a lot, buddy. Talk to you soon.